Hello there, traders. Welcome to today's live stream. I'm going to be taking you through all things data. We're going to be having a look at some charts of interest as well as we go through today. We're going to obviously cover the currency strength meter, some of the charts that we're looking at in terms of that for opportunities. I'm also going to maybe talk about a couple of other opportunities that I've seen. We like to talk about seasonals, commitment to trader reports. We're obviously going to talk a little bit about gold as well. We're going to cover some of the markets that you trade. So, hi guys. Hope everybody's doing well. Hi Ratish. Hope you're doing good, mate. Hello to you, Vincent, as well. As always, guys, if you want to shout out a chart that you want me to check out at any point as well, if you have any questions, feel free to drop some in the chat. Good day to you, Carol. Pound US dollar, yeah, no problem. No problem at all. Where is cable? Here we go. Ratchis Gold, yeah, we'll get on to that. Abina, welcome. Hope you're doing good. Just give it a couple more minutes, guys. Just give everyone a chance to jump in. While we're doing that, we'll go cover the news and then we'll go over some of those charts that you want to take a look at. So in terms of data this week, we've got a lot of high impact data, right? Good day to you as well, CG. Hope you're doing good. We've got a lot of high impact data. We've had some data out this morning as well. We had the German CPI month on month coming at 0.3%, a little bit up from the previous. But we've got some important data coming up this afternoon. We've got JOLTS job openings and we've got the CB consumer confidence. So this is going to be one to watch when it comes to looking at those stock market plays. It's going to be important to the US dollar as well. So we're going to be looking at this at 3 o'clock. I might still be streaming around this, so we might have a little look at a reaction to this move. The important one really is probably going to be the both are pretty important actually. CB consumer confidence. Confidence has been down recently. If we just go take a look at and expand the detailed view, we can see that we've been a little bit more towards the downside on this over recent times. The JOLTS job openings as well. If we take a look at the average of what's going on here, we can see that we've been on the decline here. Now, typically when a JOLTS job openings are increasing, it usually means that the economy is, creating those jobs. Obviously, we've got NFP as well coming up towards the end of the week. People are looking to hire people essentially, and we're seeing a decline of that. Okay, we've seen a very slow decline of that, kind of in line with the inflation, right? Inflation got up to the highs back in 2022 as well, and as we've seen the interest rates rise, and we've seen basically companies hiring less and less, putting out job openings less and less each month, and you can see that we're starting to see that average decline here. So expected to see a little bit of downside again today to this figure. So interested to see how the market views this. Is it going to see this as a bit more of a bearish view as well? Are we going to see a continuation, a decline in the S&P 500, for instance, in the US stock indices, as well as the US dollar, right? So that's going to be something that we're taking a look at 3 o'clock. But really the data kicks off on Wednesday, right? Wednesday and Thursday and Friday this week, to be fair. Very big days in the market, and we can't really play this down as FX traders. This is probably one of those weeks where we've got a little bit of everything, right? We've got everything that we can really kind of think of. We've got inflation data out of Australia, and we also have manufacturing PMI out of China. This is going to be huge for the Aussie dollar going into tomorrow. We can see that if you look at the recent performance of the Australian dollar, it's been very bearish, right? Very, very bearish. And if we see CPI quarter on quarter, year on year fall, and we see manufacturing, more importantly, the manufacturing PMI in China fall, this bearishness on the Aussie US dollar is going to continue. Okay, we're going to see a continuation of that. Now, last week we saw the 1 year and the 5 year loan prime rate in China being cut, which is basically there's kind of interest rates. They're cutting those last week, but we won't really see the impact of that for like another month or so, another couple of months anyway, to see the real impact of that. Now, the manufacturing PMI is coming out of China. Okay, if we just have a little look and open this up a little bit, is forecast to come in a little bit lower. So if we see a lower number than what is forecasted, a lower number than what we had previous, then we're going to see that, you know, continuation, like I said, of a little bit of Aussie pressure. If you have a little look at what's going on in the CPI year on year, expected to fall from 4% to 3.8%, that'll be a welcome relief for the RBA. I still feel like the RBA are in the camp of potentially hiking interest rates. I think the market's pricing about a 70 to 75% chance of a rate hike from the RBA by the end of the year. So higher inflation is not good, right? Higher inflation is not good. And this is well above the 2% target. You know, that's where they want it to be. They want it to be nearer that 2%. And we're not getting that right now. We're not getting that. So RBA still looking at hiking. Now, you know, I talk a lot about the fundamentals on the channel, and we talk about things like that. You know, if there's one thing that I really would say take note of, it's interest rates, right? Now, if you go on Forex Factory and you come down to the calendar, you can see the central bank interest rates in here. Okay. Now, typically when a currency or a central bank has a higher interest rate, like you can see in the New Zealand US dollar and the US dollar, compared to lower ones like in the Swiss franc and the yen, you typically see those markets outperform those. Okay. But we're seeing significant changes, right? We're seeing the Swiss franc or the Swiss National Bank cut interest rates down to 1.25%. They could potentially go again. We have Swissy data coming up on Friday, which could influence another cut. So we could be seeing this down towards 1%, right? The RBNZ are not really doing anything right now, but I expect the RBNZ are very likely to cut in the next meeting. So we could see 25 basis points there, maybe to 5.25%. In September, the US are looking to cut rate as well. But this week, we've got the potential for the Bank of England. But if this would be one thing I would say, have a little look at how the market and how these interest rates are impacting markets. And we've got 3 rate announcements this week. We've got the Bank of Japan, okay, which is going to be very significant in the market. Why is this significant? Well, we're starting to see inflation rise in Tokyo again, okay? So inflation moving higher could influence a central bank to hike interest rates. That would be a stronger yen. Okay, we've seen a stronger yen recently. Are we going to see this continuation, basically? Are the BOJ going to capitalize on this recent yen move? That's what I'm looking at this week. And if they do, then we could see some significant yen strength. If they don't, then the market may feel like the yen is not the place to necessarily continue to buy. We might see a sell-off at the yen, dollar yen in particular, trading just above the 152 handle, which is a significant level in the market. We then have the US interest rate decision, right? And like we just saw, current interest rates at 5.5%. Okay, or you know, kind of it's like a barometer between sort of 525 basis points and 550 basis points, but 5.5% on interest rates at the moment, and they are looking to hold. Okay, so you know what I can see in terms of coming back to sort of yen and the US right now is if we hold here, well, the Bank of Japan have a very low interest rate, 0.1%, right? So the market may feel like the carry trade is back on. And that's what we typically see in summer months, right? We usually see the carry trade coming back into action because everyone goes on holiday. They like to just position themselves going into that summer period. So usually we see a shift back into sort of risk on, and we see a shift back, and yen gets a little bit of weakness in that period of time. So looking at this, to me, if we hold here, that could be, you know, fairly bullish in the short term for the US dollar, just because of the carry trade factor. Now, the market at the moment, I haven't actually looked. Let's have a little look ourselves. If we go on here and go to the CME Fed Watch tool, I'll just open this out a little bit. So we've got the two side by side. So we look at the July meeting here. You can see that the chance of change is 95.9%, right? Sorry, no change is 95.9%. So the market is not expecting a change in the July meeting. However, if we go to the September meeting, there is a 100% chance that the market is going to ease, right? It's going to cut it between 500 and 525 basis points, which is basically, that will show up as 5.25%. But the probability at 100%, so they're pretty certain. They're really, really certain that we're going to see a move in September. So this statement and press conference on Wednesday is going to be super important, because if the central bank chairman, Jerome Powell, so the chairman of the Federal Reserve, Jerome Powell, comes out with any statements like, we're really not comfortable with where inflation is at, we still need to keep rates higher, anything like that could spook the investors looking to see a cut in September. And I feel like that could be fairly bullish US dollars, right? That could be fairly bullish in the short term anyway. If they say that we've got reasonable information now going into September, that there could be opportunity to start decreasing the interest rates, that is going to be negative dollars, right? That is going to be negative. So it'd be interesting to see how this plays out going into tomorrow's meeting. And then finally, at the end of the week, we've got the BOE. Well, say end of the week, Thursday, we've got the BOE, right? Now, the Bank of England are expected to cut interest rates down to 5%, I believe. Let's just open this up a little bit. Yeah, down to 5%. Now, this could be a bit of a 50-50 move, right? I think that it's actually weighted at 60-40 now. I think 60% probability that we're going to get a cut from the Bank of England. Now, there are some really good figures in the UK that suggest that the cut is coming, which is going to impact Carol's view on pound US dollar, looking to try and trade that currency. Expecting a rate cut. Now, two things could happen here. One, we could not get a cut, right? And it stays at 5.25%. Reason being is because the Bank of England's chief economist was suggesting that we're not going to see, well, not necessarily see a cut, but that inflation pressures are still being felt in the market. So that could be something that keeps them away from trying to cut rates, but we still might see a change to the MPC official bank rate votes. And what this basically is, the Monetary Policy Committee in the UK. And what you see here, this 027 number is essentially, if I just actually decrease the size of this a little bit. So the first number here, that is a hike. Okay. The second number is how many members voted to cut. And the third number is how many members voted to hold interest rates. Okay, so arguably this is a very important bit of data for the UK, right? And that's expected to change. So 0 members voting to hike, that's expected. Inflation in the UK, I think, is at 2% right now, which is target range for the Bank of England. 6 members now voting to cut, right, and only 3 voting to hold. So that's why the probability could be going up of a chance of a rate cut this week. Now, if that happens, obviously, we're probably going to see continuation of pound downside into the event, right? There's other data as well that we'll touch on in a little bit when going over pound. But the likelihood of pound decreasing into this event, I think, is quite high. I'm kind of looking for a bit of a pound shift going into this week, because if we start moving into an area where the Bank of England is going to start cutting rates and go on a little bit of a easing cycle, essentially, then there could be an opportunity here to see pound a little bit lower. So I'm actively looking for some pound short opportunities. And then on Friday, you can't see it here right now because I'll have to delete everything. So let me just do that a second, and we'll delete all this off. Where's the clear all button? There we go. And we go down here. We have non-farm payroll. So what a week we've got. You know, this is a huge week in the market. 3 central bank decisions, 2 inflation reports, and an NFP to go with it. So hold on to your hats this week, guys. It's going to be a very interesting trading week. Average hourly earnings month on month expected to be the same at 0.3%. NFP number meant to come in below 200k. I feel like anything below 200k is usually seen as a bad report. Anything above is usually seen as fairly good. Previously, obviously, we had the 206s and forecasts were coming in at 177s. Unemployment rate. This is a big number to watch out for going into this NFP data. If we see 4.2% here, then I think this is going to be pretty bad for the US dollar. If we see 1.7, let's say we see 177 print and 0.3% print there, then that 4.2% figure is going to drive the US dollar lower because the chances of a cut will increase. I know the chances already are at 100%, but the likelihood of the change is going to be even, is going to be kind of held at that 100% figure in September. So yeah, big trading week this week. Obviously, we'll cover more of these going into Thursday's trading day as well. Obviously, we'll talk about the outcome of Wednesday and Thursday's live stream. So make sure you come back for that one. But yeah, big trading week this week. And sometimes when you have all these red folder news data events, you kind of scratch your head thinking, well, where am I going to trade? Where am I going to trade this week? Where am I going to be able to position myself to kind of get a decent position within the market? Now, that brings me on to cable. Okay, that brings me on to cable. Now, cable's been in a little bit of a decline ever since coming into that kind of 1.3 handle. We've seen the market starting to push a little bit lower. I've been favoring this cable move to the downside, and we've recently come into an area of support. So we'll just go up to this weekly chart first and just zoom in a little bit. Okay, now, if I'm looking at this price action from a short-term point of view, I'm thinking, well, actually, that's not necessarily that bearish, right? We're trading within this week's bullish candlestick. So the range of these candles here on a weekly time frame is fairly shallow, very similar to what we have here, right? It's trading really within that sort of bullish candlestick, very shallow moves to the downside, and then an explosive move higher. You know, so are we kind of witnessing that again? Potentially. But I like the idea of looking for pound downside, especially in the near term, because we've got the idea that the Bank of England are going to cut interest rates. Not only that, there is a significant signal on the commitment of trader reports. So if I just log into the trader reports here and bring these on screen, just let these load a second. So we can see we've got a short signal right now. We've got a short signal pound. Okay. And like I say to you all the time, current traded reports are great, right? But they're really rubbish at timing things. Okay. So just keep that in the back of your head. Okay. Now you can see here are the commercials, right? So these are not in the markets to make money. They're in the markets to hedge their positions. Okay. Now they are shorting at extremes that we haven't seen for a very, very long time. Okay. So 36 months, we've got an extreme. If I just open this up a second, you'll be able to look at the weekly chart and you'll see that. Now, if we look at the short contracts here on the commercial, so I'm just going to take off the net and the long. You can see that we're up around about 211,000. And if we look at the changes going into this week, they've kind of added 6% of shorts. They've added a little bit to their longs as well, but they've added 6% onto their short positions through here. And if I look back, and if we kind of stretch back price on the chart, you know, the last time we were kind of in a similar area was back here, right? Back in, and that is on, yeah, like we talked about before, it was back in 2014, July 2014, right? So we've got a significant buildup of selling pressure on the pound right now. And this could mean that the market has potentially reached a top. Doesn't mean that we're going to see just a huge rollover in price. It means that maybe that 1.3 area could be the top in the market, and we could see something like this happen. We could see another push up and a rejection around about that 1.3 level. Okay, we can see that non-comms positioning. So what non-comms do, they are in the markets to make money, right? But they can also buy at extreme levels. When we're talking about the short levels on the commercials, they can also buy at extremes when the market is potentially at a top as well. So we're looking at pound here as a potential opportunity for a little bit of a reversal. Okay, so the last signal we had really was, we'll just zoom back a little bit, and I'd just like to see how price reacted at that sell signal. So the last time we had a short signal was back here. Okay, and that was in 2023, July 2023. So again, we're kind of looking at July, August again as another potential sell signal, and look, price moved from the 1.3s down to the 1.2s. Do I expect that again? Probably not right now, because of the dynamics with the US dollar, but we are in that level of resistance and the market is moving lower. So I like to then kind of identify what price action's doing, and we're getting bearish weekly candlesticks here. Daily's looking a little bit vulnerable as well. The only thing I would say is we've got this kind of minor area of support in here that we've had a little bit of a reaction from right now. So if you're looking to trade cable, I'd definitely be more on the short side than the long side of things. You can see on the 4-hour time frame, we've got this really nice structure pattern going on where we're getting lower lows and lower highs. You've even got this kind of structure in here, this kind of consolidation that the market might want to retest before continuing lower. What I would say though is you're at this support point. So, you know, if we start to see, let's say, price break into highs, then the market moving back to 1.3 would be highly likely. And looking for the bigger rejection at that point. But essentially, I want to see, can we breach the 1.28 handle? Can we trade below that? Can the market then open itself up to a potential move lower? That's what I'm kind of looking at here. Now, we might not want to go and trade this against the US dollar. Okay, because obviously there's a lot of dollar data coming out this week, and it might not be a place where we want to go and trade that pound reversal. Essentially, we might want to go and trade it somewhere else. Now, one chart that I'm eyeing up right now is pound CAD. Okay, this is a market I'm very interested in potentially being short on. Okay, and the reason being is because we've come up to this very large level of resistance. Okay, so we can see it was this resistance in the past. Actually, if I just draw off, get rid of those drawing tools here. You've got this zone of resistance in here. Obviously, you've got significant levels of resistance in the past as well, if that wants to go on there for me, up at those higher levels. And we've got the idea that the commitment of traders is potentially topping out for pound, right? Now, if I look at CAD, now CAD's in a little bit of a neutral place right now in terms of currency strength and weakness, right? So you have a little look at the currency strength meter, and we'll have a little look at this. We can see that both pound and CAD are fairly neutral, right? If anything, you've got pound in the +1s, CAD's in the -3. So you're technically still looking a little bit bullish for pound CAD. But if I come down to the 50 MA, now I don't have enough data on the 50 MA strength meter as I do the strength meter that I've got there. But what you can see is on the pound front, we're very bullish, right? Very bullish. But look at the change that we had on CAD. Now, usually if something's at -5 and something's at +7 on the normal currency strength meter, I'm looking for a reversal. So I'm kind of looking to see, are we going to get a similar path here? Now, we might be a little bit early to this move, but I'm looking for signs of potential reversal here on pound CAD at the moment. And I'm looking to see if we get any kind of changes into structure here. Market is just kind of stalling at the moment, just kind of stalling in this area. We've got this kind of weird price action going on in terms of sell-off. We're just kind of double topping, rejecting. We've made a new low, but then prices then made a new high. So there's just a lot of chop going on here right now. So I'm just biding my time a little bit with pound CAD. I wouldn't mind seeing price kind of breach these lows here and then really kind of open up, maybe take that low out at 177 as well as a potential move for some lower prices. So yeah, looking for pound CAD essentially as well. The reason being is because if we look at the two commitment of trader report data side by side, you can see that we've got a sell signal on pound, buy signal on CAD, right? So I'm looking for that potential setup here from the commitment of traders because they're both at extremes essentially. So that's definitely one market I'm looking at. So yeah, if you're looking at kind of pound opportunities, what I'm saying to you is I like pound shorts at the moment. Do you necessarily want to go trade it against the dollar? Obviously, that's completely up to you with the way you trade. Maybe you can look at the sort of recent breakout that you've had here. Maybe the market can kind of come back into that point and continue to sort of trade lower in and around there on a little bit of a break and retest opportunity. What else we got? Okay, so Ratish, I want to take a look at gold. Does that all that information make sense, by the way, guys? Let me know if you have any questions about what I've just shown you there in regards to anything you've just seen, the commitment trader reports, anything like that, anything about the data, drop me a message. So let's go take a look at gold. Now, gold's going to be a very interesting market going into this week because I feel we're probably going to see a little bit of gold upside. Reason being is because usually when we have these high red folder news events, they can be, the market can go looking for sort of safe havens to trade, right? And to kind of put their money in. And gold is classed as a safe haven, right? So we're likely going to see a little bit of bullishness out of this. Now, if we look at the weekly chart, look how price is traded at the moment. We've breached into new highs. Okay, we've breached into new highs here. And the market has pulled back. We've had that sort of bearish close last week. But if you look at the close of that candlestick here, easily closed back within 50% of the range, I reckon. What does that tell you? It tells you that buyers have come back in at the end of the week. Now, do I feel like this still has some legs to the upside? I do, because again, if we look at commitment of trader reports, the contracts aren't necessarily an area where I feel like there's a top. I'd like them to be a little bit higher. So that means that as prices come in lower, right, commercials are going to buy more. They're going to buy more because they see it as being cheaper than the previous week, right? So they're going to try and get long a little bit more. Now, from the non-com side of it, you're probably looking at that they're trying to trade within this range, right? They're trying to trade within that range, and there's potential still to do that. What I don't like about going gold long at the moment is the sort of overall minor trend that's developed here. You know, you've got that kind of lower low, lower high pattern right now. Don't quite like this pattern. So do I want to be trading gold right now? Probably not. I did like the idea of maybe being short in the short term yesterday, but there was a huge level on gold. If we just go to 30-minute time frame, I just put the session breaks on. There was a huge level down here, 23.73 yesterday. If I just put let me just grab a volume profile and we'll go from Friday's price action. Sorry. Friday's price action, we had a consolidation in here. And I like the idea of potentially price seeing this kind of breakout move into this zone. And then if price broke through that zone, then I thought maybe we would see a little bit more downside, but it didn't. It held the level. It held that level of that formed on Friday. So this kind of high volume node that you can see through there, price closed above it. And since then, really, we've been trading higher. The market's been pushing more to the upside here. So there's opportunity, I feel, to see gold prices continue higher. Now, we might open, we're coming into the US Open at the moment, so we might open and the market might want to try and flush down a little bit. But it's all going to depend on the data coming up. I think if we see a little bit of a drop in the dollar data that's coming up at 3 o'clock, then gold prices could try and head back towards that kind of 2400, 2410 kind of level this week. But yeah, I didn't really want to see price hold above here if I wanted to be short, I'd rather see price break through levels like this if I wanted to be short on the gold market, and we're not quite seeing that right now. I mean, commodities on the whole, though, have not been trading very well. If we look at sort of silver, we're very bearish silver. We talked about shorts up at the $30.50s. If we look at palladium, palladium's down as well. We've got other commodities down, nat gas, oil prices coming in lower as well. So even if we look at copper's a chart that I was looking at recently. Now, copper's usually a good barometer of economic health, right? When copper is rallying, we usually or typically see a very good sort of robust sort of stock markets, things like that, markets in very much risk on. And we've seen a significant decline recently, big decline in copper prices, which can reflect the sentiment within the market. Usually they call it Dr. Copper, right? Because it's usually, if copper's performing pretty well, it means that industry and construction's usually doing pretty well at that point, which obviously usually means that people are spending if they're doing construction projects. And typically in those type of market environments, we see well-performing markets, right? We're not seeing that now. Copper prices are not in demand, right? They're not in demand at the moment. And I did look at the commitment of traders on copper to see if there was any kind of extreme levels coming in. There's not at the moment. So I still feel like copper demand is going to go a little bit lower. And we could obviously see some significant changes because of that. So yeah, commodity prices aren't doing particularly great. I just feel like gold is not really reached its top yet, and I feel like we could still see some short-term upside to that, especially because we've made a new high. We've kind of tested that high and we've made a new high. The only thing we can argue, I guess, higher highs, lower highs on the stochastic, you got a bit of divergence going on there if you use that at all. Dollar yen, yeah, let's have a look at dollar yen, because dollar yen's a very important market to take a look at going into this trading week. We are trading or have been trading at the 152s, which is sort of this level here. I'll just add in the 152. And the market's starting to rebound in from this area. We're starting to see a little bit of upside from a technical perspective. And again, I don't think we're going to see a conclusion to what we want to see on dollar yen until we get all that data tomorrow. Is it the smart thing to go and trade on dollar yen when you've got two central bank announcements coming on one pair? Probably not. The best thing to do is probably wait for the outcome. Wait to see how the market has interpreted that data going forward, and then look for your opportunities to trade this. I still feel like there could be some short-term downside. I don't know whether the market will want to go and revisit 152. If we look at the rebound that we had, quite a strong rebound, I would say. It's not been one of those where you see a complete turn, but it didn't really hold around 152. Obviously, someone was waiting to either buy dollar yen or obviously get out of their shorts maybe at that point, and we've seen that kind of rebound since. But if we're looking at it in kind of the short term side of things, one thing we talked about a lot recently has been the VIX rallying and moving higher. And if that does continue higher, then the market does go more risk off, and that means yen strength. Okay, so I don't know whether this move is necessarily done yet. I'll be monitoring this. I'll be watching tomorrow's outcome on what happens. I wouldn't be able to say with any kind of certainty what the market's going to do here because of those events. If I look at the currency strength meter, it's still saying yen's one of the strongest currencies right now. So it's definitely something we should be looking to have a little look at. That's the 50 MA one, but also here, positive twos. So yeah, I like the thought of buying yen, but do I actually want to do it myself? Probably not. So I'm going to sit out. I'm going to wait, because I think if we get a Federal Reserve that holds interest rates, but then also talks about maybe not cutting in September, I think that's going to be very bullish US dollars. And if the Bank of Japan still continue to move at a snail's pace and not want to go anywhere, then I feel like dollar yen could start making its way back up to the upside. But this 152, very critical price point for the market. If we just kind of open this out and look left, we can see very significant resistance points and support points on this market. So 152 is that sort of base that we're getting right now. If it continues to be that, then I'll be interested to see what longs would look like in that. And the best thing about trading, right, there's no rush, right? You don't have to rush into anything. You're the guy that's clicking the button, or gal that's clicking the button. You don't really need to rush into anything here. You know, we've got this potential sort of breakout, but nothing's confirmed yet. Nothing's confirmed. I think if we had like a consolidation and then price broke out of that consolidation, I'll be more favoring that upside move. But at the moment, technicals, I would say, are still fairly bearish. They're still fairly bearish right now. Okay then, guys. How long are we going for? 36 minutes, right. I've just talked all the way for 36 minutes. Let me know any other currency pairs that you want to take a look at. I'm going to show you a market that I'm currently trading. So I'm going to show you my thought process behind it, and you know, why I'm looking at that. Now, basically, looking at the seasonal planner here, Aussie CAD, Aussie Swiss have some potential seasonal players going on at the moment. And if I just go on to Aussie CAD, there is a decent seasonal pattern that usually forms around this time of year. Now, the Aussie CAD seasonal play has not been following the seasonals that greatly, but over the sort of election year, we've got a seasonal period that does pretty well. If I just put on the election year, okay, which is this purple line here, let me take the 20-year off. You know, we can see that we have been fairly tight to the average, especially through sort of May and into July. And usually in an election year, we get quite a considerable move on Aussie CAD sort of start of July, around about the 12th of July, all the way down to the beginning of October. So this is a play that I'm looking for right now. We can see that kind of nice move. Now, what I love about the market's made clear feature here is we can go select a month, and we can say, okay, well, what if July has been negative? Okay, we can have a little look at the performance as well. And if July has been negative, typically, again, we kind of see a move where we get a move lower, okay, into that October period. So what this is telling me is that Aussie CAD could be short, and then really towards the end of September, start of October, we should be looking for a reversal in this, because so far, every kind of seasonal pattern I've put on here, October has a very big sort of reversal in Aussie CAD. So I'm looking for Aussie CAD shorts at the moment. Kind of goes in line as well with the commitment of trader report data, where we can see there is a substantial long coming in from the commercials, right? 100% across the board. That is a potential bullish signal. So I like the idea of being short on this market. So if we go over to Aussie CAD, what's price doing? You know, what's price been doing? Let's have a little look. So if I remove all those for a second and go to the weekly chart, we have a strong bearish close last week. Okay, we had prior to that, we had a strong bearish close. Market is moving lower. Where could it move to? There are a couple of different levels that I like. So in the immediate, where could it move to? Well, it could obviously come back towards those lows again. You know, this period here is a period of low volume there. So the market may want to go and test that. Now, if it breaks it, we could obviously come down towards this sort of consolidation zone between sort of 0.8930 and 0.88. So that's what I'm kind of looking at. If you have a little look at it from a monthly perspective as well, you've got this kind of wedge pattern forming as well. We've got a nice bearish close potentially forming here on the monthly. Weekly is looking good. Daily is also looking very good. Look at the price action of these candlesticks, right? And we talk about this quite often. After a big move, if you see a very shallow pullback in price, that can lead to another extension of a move. So I'm actively short Aussie CAD right now. I'm about, let me just turn profit into pips. I'm about 30 pips in profit at the moment. So let's have a little look at that. So basically I've gone short up here. Okay. So what I looked at this morning at the 4-hour time frame was the fact that price has been kind of making its way to the downside. We've had this minor sort of pullback, like I said, very shallow, not really aggressive buying coming in here. So I was just looking to see if the market reacted at the highs, and something that I look for in a downward trend in a pullback phase, right? You expect the market to make higher highs and higher lows, right? Now, we haven't made a lower low yet, which is something I would like to get. I would like to see, obviously, because I am short. But what I look for as well is, do the highs fail? Okay, do we see a high fail? And I feel like that's what we're getting right now on Aussie CAD. We're getting the 4-hour high fail. And if I look on the 30-minute chart, there was a really nice sort of bearish close here where we had the close very close to the candlestick low. It had tested all these highs in here. So I was looking maybe for the continuation of a downside play here on Aussie CAD. So I ended up taking a short position on the close of this. Stop loss on this is actually quite wide because I'm looking for a bigger picture move. So, you know, I'm looking for price to minimum to come down towards that 0.9 handle. So I've put my stop loss above that swing high here. And, you know, I say minimum, I would like it to come down to at least the second level, which is down towards this 89.30. Because I'm trying to play that seasonal pattern, right? Trying to basically play this potential move in here. Okay. Now, when you look at it on the average sort of returns on the month, look at August. You know, usually you see that decline quite rapid, quite a significant decline. It's almost like it's like its worst performing month is in August. Okay, so we can expect maybe a decent move out of this right now. Okay, we can expect a fairly decent move out of this. So I'm looking for that. I'm looking for that actively. You know, the market could give us an opportunity in terms of if we see price move down and then get one of these patterns again where you get that sort of triangle base, look for the breakout, and we can look for continuations of this move as well. So I'm going to be monitoring this on a sort of higher time frame, like the 4-hour time frame, and I'm going to be looking to see if we can continue to trade lower. If we don't and price kind of breaks and moves higher, then yeah, so be it. I'll be out of the position with a loss. So, but I'm happy to be in this right now. I feel like I've got the seasonal plays I'm in line with. I've got a commitment to trader analysis that I'm in line with. So yeah, I'm more than happy to take a swing at this, I feel, and see if we can kind of get something out of this potential position. So let me know your thoughts on that one, guys. You know, again, whenever I look at trying to trade in the markets, I always look at why. Okay, now a lot of people don't do this. You know, if you're a struggling trader, you're probably not looking at why. You're probably not looking at why you're getting involved within the market. You're probably just thinking, well, I see all these people on Instagram and things like that. They just open a chart and they click a button and they win. And nobody wants to hear that the thing that you're going into is going to be difficult, right? And now this industry is very, very difficult, very difficult. So always think about why you're getting involved with the market. Now you can see I've got a seasonal play. Okay, so there's a seasonal idea here. And I know a couple of traders that just trade seasonal patterns and are very good traders. Cut reports as well. So that's my why. That's my why I want to be in Aussie CAD short. Then I need to look at the conditions. Okay, what are the conditions doing? Do we have conditions that suggest that this market is bearish? Right? I would say yes. Market has been trending down. We've come back up. We've hit these highs. Right? Market's rejecting those highs. So I would say that this is in a downtrend. Okay. So that's what I'm looking for. Okay. then all I need to do is apply a strategy to be able to take money on a consistent basis from the market. So that's what I'm trying to do here. I've seen the market come up into the highs. It's rejecting those highs. That's part of a sort of breakout or a rejection of false breakout strategy. If I bring on the 50 moving average here and go to an hourly chart, another one that I like to look for is a close below the 50 MA with a RSI that's in an overbought condition. That's a little bit of a move there that you can see is also creating a little bit of a signal on as well. So yeah, multiple sort of strategies here kind of lining up. The other one as well is we can look at volume profile. So we go from the swing sort of highs up here down to the swing lows. What I can try and do is identify strong levels of resistance using that. So this zone essentially in here, and we kind of touched the edge of the zone and the market has rejected. Okay, so that's what I'm looking at here right now, looking at the potential for this market to continue to the downside. Obviously, there are some caveats in the way of this. You know, that Oz data tomorrow, right? Oz data tomorrow is going to be, you know, interesting. It's obviously going to impact this trade. So what I don't really want to see is a CPI that comes in higher, and I don't want to see China PMIs coming in higher as well. That would be very positive for the Australian dollar, would be very negative for my trade. Okay, so keep that in mind. We're coming up slowly to the news now, right? We've got a little bit of news coming up today, which is consumer confidence and JOLTS job openings. So we'll have a little look at that in a moment. What other markets am I looking at this week? Well, still got a long signal on Swiss franc, so I'm still looking at Swiss franc. Potentially Aussie Swiss could be good, and potentially Kiwi Swiss could be good. So if we look at Aussie Swiss right now, you know, we're still seeing that sort of downward move in the market. You know, that could be a nice move to try and get on the back of. Look at that daily chart there, very similar to Aussie CAD, where you've got a sort of very shallow pullback. Yeah, I did quite like Euro Swiss, to be honest. You know, this market looks pretty good. We've had a nice little change of trend there. And I was watching this kind of 4-hour pattern developing, a bit of a double top going on. And the market seems to be pushing lower. So I didn't take this trade this morning, but I was looking at this potential break there. But yeah, I like Aussie Swiss short. I think that's a good market. Kiwi Swiss short as well is pretty favorable. Again, price action really here, not really showing much buying going on a Kiwi at the minute. So still like the idea of being short on Kiwi. But it is starting to gain a little strength across the board. Let's go just have a brief look at the stock indices then. What are they doing this week? Well, we can see that, again, very shallow consolidation here right now. Yesterday wasn't really a lot going on. So, you know, I'm expecting maybe the market to just kind of wait or be waiting for data. Basically, that's all the market's going to be doing this week, is waiting for those data drops. I'll be interested if we stay below the 50 MA on the 4-hour chart. You know, typically that can be a little bit bearish. I'm watching this zone here. This zone, I think, is a good zone to have a little look at some potential upside on the S&P 500. So I'm going to set an alert there and see if we get the market moving into that. Basically just looking to see if the sentiment that we've had for the past 2 weeks, is that going to flow into a third week? You know, on pullbacks, we don't usually see more than 2 weeks. There was this exception back in April, which is something that I've related to on a couple of occasions, especially when it comes to the volatility index. You know, back in April of this year, we had a VIX that rose from 12.95 to 21.35, and that corresponded with the move here on the S&P 500. So the market moved in that same period to there. I'm kind of feeling that we might see similar volatility to that. So that's why I'm expecting just another week of downfall. But I mean, look at the move that happened after that. It was quite a surge. So trying to see if I can try and get on a move like that. Really, can price pull back and then kind of look for an opportunity to sort of buy stock indices again. Same with this logs of the Nasdaq. The Dow is performing pretty well as well. Russell's doing really well at the moment. I like the idea of Russell, and so is the FTSE starting to perform pretty well as well. The only one that's down really is the HK50, which is the Hong Kong indices. They're not doing well. China's obviously not performing that well, but we do have this nice little area of support that could see a little bit of a rebound. But yeah, that's all I've really got going on this week. I've been looking at sort of how I can position myself in a way that's going to favor me in a week like this week, with lots of data coming up, and we don't really have too much choice. I would say the only thing we can go kind of look for, I think, is this continued Australian dollar weakness in the short term. That to me is looking pretty good now. Like I said, I like Aussie CAD short, so hopefully this one continues to play out for me. Morning, right guy. Hope you're doing well. Any questions, guys? The chat's been very, very quiet today. If you've been liking what you're seeing, please leave it a thumbs up. Lets me know you've been enjoying your content. If it's your first time here, let me know your thoughts on seeing different types of analysis, like commitment of trader reports, seasonal reports, bit of fundamental analysis. I know it's not really what I like to call the sexy trading streams, right? Where you've got these people that are looking to trade the 1 minute time frames and things like that. But controversially, I'll probably say that if you want to be successful in the long term, you probably need to step out of those time frames a little bit. Thank you, Abina. Appreciate that. I might stick around for the data drop. I might stick around for it just to see how it plays out. Otherwise, I might call it there, to be honest. Got 6 minutes. Got CPI out in Europe as well, so inflation data out of Europe. This one's going to be interesting at the end of the week, right? Swiss franc CPI month on month, minus 0.2%. So Swiss National Bank could go again on a cut, I think. Ben, I'm just confused. Oz keeps getting weaker while we are expecting them to hike. Yeah, I think that's mainly down to the poor data out of China and the poor performance of China, because Australia's main trading partner is China. And if China are performing poorly, then they're not really going to go and do much trade, essentially. So Australia could be heavily impacted by that. The Australian dollar is also considered a risk currency, right? And the market's shifted heavily into risk off recently. And so the market's pulling their funds away from riskier assets like the Australian dollar and putting them into things like the Japanese yen, the Swiss franc currencies. And Euro being strong with the political turmoil there, its current experience. The political turmoil is kind of gone in a way, right? So I think the bigger impact on the Euro would have been if Le Pen had full control, right? Which they don't. So in terms of political turmoil, it's actually quietened down a little bit in Europe and in France in particular. Obviously, there's the Olympic Games going on as well. So that could be a very good distraction away from sort of the politics going on in France right now. So, that's something to look into. I think we've got to probably... political turmoil and things like that is what I like to call headline risk, right? And headline risk can impact the market, right? But it tends to only impact the market in very short bursts, and then we usually see everybody revert back to the normal data. So they'll go and have a little look at what the ECB are doing, what is the inflation readings in Europe? What is the employment rates in Europe? What's going on in sort of Germany and France in terms of data? Because they're the two biggest economies within the Eurozone. So yeah, I think from that kind of standpoint, the market kind of reacts to headline decisions, but we never know when headline risks are going to come, right? So you just got to be a little bit more aware of when something's happened. That's why people really focus just on the macro data that's planned, essentially. We don't really have a lot of Euro news this week. I mean, German CPI month-on-month climb into 0.3% was pretty good. But if you take a look at the general picture of Germany's preliminary CPI month-on-month, it's been fairly low anyway. I think what really hit Euro last week was the German manufacturing PMI coming in lower again. It was starting to trend a little bit to the upside, and then that just didn't happen. It kind of gave all those sort of recent sort of better performances back, and that would have prompted a lot of talk of further ECB cuts. And you can see Europe at the moment is 4.25%. So compared to the other sort of top currencies at the moment, still very low. Well, lower compared to. But I'm kind of feeling that we're getting a couple of weeks of risk off, right? We're getting a couple of weeks of risk off. And then I think we are going to start to see this dynamic shift again because of the lower interest rates. The market's going to be looking for areas to get value for money. And especially if they're holding for a longer time, they're going to be looking at the carry. They're going to be looking at the carry trade. So we might start to see sort of some buying of New Zealand dollars, right? Let's have a quick, how many minutes have we got actually to the news data drops? Got minute 29. So let's just put that to the side. Let me just close it up a little bit more. And then I'll bring on some seasonal, and we'll just have a quick flick over to when we start to see. So let's go to major currencies, and we'll have a little look at things like the New Zealand dollar. So let's see if we get any kind of strong seasonal plays here. So there's a potential seasonal play coming up. I mean, look at the performance against the past 20 years. When you would expect a New Zealand dollar to be bullish, it was very bearish. So we're not really following any kind of strong seasonal pattern right now. So yeah, it's hard to judge there. Could argue it's following a bit more of a 10-year. But again, usually fairly weak until October. But we're not really following the seasonals that well right now on New Zealand dollar. So a little bit more of a positive number on the consumer confidence. Just waiting on the JOLT job openings. Let's just open this up a little bit. And let's open a dollar yen chart. Let's have a look at dollar yen. Okay, so that's actually fairly positive in terms of the jobs number there, 8.18. So still, if we look at the grand scheme of things, right, it's still tracking lower, on the average. If you were to draw an average there, it'd still be pumping in a little bit lower. So I think that's a bit of a non-event, to be honest. I don't really see the market going a bit haywire on this. Yeah, they're going to be waiting for all of this data coming up Wednesday. Maybe a little bit of a nice shock there. Maybe the stock markets might have a little bit of a interest in that. We're going to the lower time frames here. Starting to see a little bit of a move on this. Still, that was a confidence that came in a little bit lower than the previous. Actually, previous was revised down from 100.4 to 97.8. That's quite a significant change there on the revision. And again, look at US JOLTS job openings. That was revised. So the revised figures have gone up to 8.23. So this 8.18 is looking a bit more significant in terms of that. I mean, look at the stock market, US 500, not taking that very well so far. That revised number there is quite interesting. 97.8 at a 97.5 reading in May. And what did the market do on May 28th? April, May. So that was a bearish sort of outcome from that, a bit of a bearish move over the next couple of days there. So could be seeing a bit of a similar path there. So I'm thinking with ours being strong fundamentally and CAD cutting twice already, Aussie CAD might rise, don't you think? I'm sure Aussie CAD right now. I am sure Aussie CAD from the seasonal play we discussed a little bit earlier. So if we just go to cross pairs and go to Aussie CAD, I'm looking at this seasonal situation where typically between sort of July, August, September, we see quite a significant downturn on Aussie CAD. I'm also want to buy CAD because of the commitment of trader reports showing us that there is a significant long signal being built. And I feel if dollar CAD in particular gets to like 139, I think that's where we'll maybe see some trigger points on that at the moment. So obviously that is completely up to you if you want to buy Aussie CAD. I'm just showing you my opinion. But in theory, you're right? That's what the market will tend to look for. In theory, you want to buy a currency where central banks are more likely to hike, and you want to sell the one where they're more likely to cut, right? In theory, that is exactly what you want to do. But at the moment, the price action is not agreeing with your outlook. And that comes down to, okay, so let's say your why is because the interest rates, right? Your interest rates and your analysis on your interest rates is exactly right. Okay. You've got a BOC that are cutting interest rates, and you've got the RBA who are potentially looking to hike interest rates, right? Because their inflation rate is too high. So there is a good opportunity that you want to be a buyer of this market, okay? But do your conditions match your thought process? You know, do the conditions match conditions where you want to buy? In my opinion, no, because what I would like to see is price action that's similar to what happened like over here. We get a strong rally up and then the market retests that maybe, or you get price come down, consolidate and breaks higher. Then you've got the conditions being met. But I don't think the conditions right now are met for longs. I feel like they're more, you know. So I get the idea. You know, buy the one where the central bank is. I 100% agree with that. But the conditions around it right now are not performing. And you know, if we look at the bigger picture, what's going on in China? China's very weak output at the moment. There's plans in China that, you know, they've got housing situations going on, housing crisis situations going on as well. So there's a lot going on in China at the moment, which is not particularly good. And Aussie and the Australia market being one of its biggest trading partners is going to feel the brunt of that, I think. Yeah, price action is dictating otherwise. That's the one thing I'd just say, right? Because the one thing I say, right, fundamental is your bias, your why do you want to get involved with it, and things like that. Your conditions and the technicals are your timing. Is it the right timing to get involved along with that currency pair? You know, if you see a change here, maybe where market rallies, takes out those highs, closes back above the 50, you know, then yeah, I would say you've got conditions to be long again. But at the moment, I feel like these are conditions that are more for shorts. Okay. Right then, guys, we've been going for about an hour and 5 minutes. I'm gonna leave it there. If you could leave the stream a thumbs up, I would really appreciate that. It lets me know that you've enjoyed the content today. It lets me know that you want to see more streams in the future. So I'm going to leave it there. Thank you, everybody that commented and asked questions. Abina, really appreciated your questions as well. Thank you to Guy, Ratish, Temel, Katia as well, CG, Carol, Vincent. Thank you very much all for your comments and questions. Really appreciate you guys turning up again and watching the streams. I will see you all on Thursday, and I hope you have a good trading week. We're going to digest what's gone on Wednesday, because that is going to be a very busy day. So it will be interesting to see how that plays out. So I will catch you on Thursday. Cheers, guys.